Hello everybody, welcome along to our 18th annual Market Update Seminar. I'm Steve Douglas, Chairman of the SMATS Group, and I've got a great pleasure today of taking you through this seminar, talking about all the things that are going on, particularly with the property markets in Australia, stock markets, interest rates, and giving you a good indication of how the world is fending. This year it's entitled Living Beyond the Point of No Return, because I think we have hit a very, very pivotal moment in society, and we have to start realising the environment we're in and how we can change our thinking to cope with the future that's coming. I hope you find it interesting. We'll have some fun, but as usual I do have to start with a disclaimer just to remind you that these presentations are my own thoughts. They're well researched, all the information, you'll see the sources. But please don't act on them solely. Please take independent advice, see your circumstances if you want to find out what to do yourself. As always, what I like to do is start with where we finished off last year. Again, with an update seminar, we're trying to have a look at what's going on as well as what might happen. So it's critical that we do consider whether or not we got it right last year. And I'm very pleased to say that we pretty much got it spot on. We'll talk about the four main areas: stock markets, currency, interest rates, and Australian property. And last year, you'll see we predicted the stock market would have a pretty good year, and that certainly came true. Double-digit growths, particularly in the US. Australia had a good year, the UK had a good year. So all round, everything was going pretty well. Currency, we thought it would get back in that 70-75 cents range, and this is the only one that we missed the mark. It sort of got up to about 67, 68 for a while there, and then came back, and as we're going to air with this, it's sitting at around about 64 cents, which I think is a bargain if you're looking to buy some Australian dollars. But that's the only one that we missed the mark a bit, but not by much. We've also got interest rates. We said that there was potentially two more rate rises, but both of them would be unnecessary if they occurred. And the RBA seemed to agree with this because they only brought in one rate rise in the period since the last event. So I'll take that as a win. And then the property markets we predicted would have a very, very good year. And indeed they did. Led by Perth, Brisbane and Adelaide, the Australian market did very, very well, and Sydney came back in instead as we thought it would, and Melbourne started improving as we thought it would. Still got some way to go there, but certainly a dramatic improvement on the previous year. So all in all, I think we got it pretty well right, so hopefully we can be as close to the mark this year. Now, as with all years, what we try and do is have a look at what's relevant at the time we do this. And this year, again, I think the most relevant issue is us as a society. We're seeing things change all around the world, and the stuff's going on. Now, there's chaos, there's Israel, there's Ukraine, still a mess. But I think it's us as a society and how we're dealing with these things that is really the topic of the time. Now, I'm going to spend a little time talking about social media, etc. So please bear with me. It's important to gain an understanding into how things are affecting us so you can protect yourself and your family from a financial perspective, even though these things seem to be non-financial. What I'm going to start with is where we're at. And you can see politically, we've just had the US election where Donald Trump has got put back into power, which is an incredible thing considering the chaos of his previous reign, the issues around him, the fact of the legal, etc. And of course, the problem was, look at the other side of the fence. The candidates on both sides of politics these days are not that good. And this is not just a US trend, this is a global trend. The quality of our candidates and the integrity of our candidates is diminishing at a rapid rate. And as a society, we should feel very, very concerned about that. But for some reason, we're accepting it. In addition, we've got a situation where we're not getting a great deal of quality financial governance. We're seeing an incredible amount of deficits around the world. We're seeing wastage. We're seeing a huge amount of expenditure. And I'm not sure we're getting a heck of a lot of value out of government spending. The US is now trillions and trillions in debt. Australia is $500 billion to $1 trillion in debt. It's all crazy, the numbers, and it seems to be getting more and more all the time. We've got a situation where the debt levels of these governments is not even on the conversation anymore. You saw throughout the US election, no one was talking about how big the deficit was and how big the national debt was. It seems to be just that's how it is. And that's a terrible thing for us as society to accept and not argue against and demand better financial practices from our governments wherever you are in the world. And of course, fairness and equity seems to be going right out the window. We're in the era of the billionaire, and we're on the cusp of going into the era of the trillionaire. And mark my words, the progression from billion to trillion will be super fast and hard to stop. And so we've got to look at society. Do we want to have individuals amassing these massive amounts of of wealth, and at the expense of society? And again, in the US, a key issue there will be the lowering of tax rates. We saw Donald Trump lower them at the company level last time. Is he going to do it again? It's genuinely concerning to me, because the lower you lower those tax rates, the less you can afford the social benefits of a society requires. And of course, economically, we're seeing inflation being the dominant issue, but inflation to me isn't a bad thing. It's there all the time. Prices go up. It's how it's being pushed and sold that worries me. I feel most of the inflation is coming from profit margins rather than cost of goods. And that comes back a bit to the fairness and equity that I was talking about, where we're not necessarily seeing the person who does the work, who creates the item, who grows the produce. They're not necessarily being rewarded. The end seller, the end distributor, is the one taking all the profits. And us as consumers seem to have lost any consciousness of what fair value is anymore. We're also seeing growth being touted as a critical element, and it's not really as important as it's told to be. We saw during the GFC, during COVID, that the world keeps moving regardless of whether we have high or low growth. As long as we keep moving, getting up every day, going to work, buying new clothes, having a holiday, eating, then there's enough economic activity to support everybody. Growth tends to distort that fairness and equity. So we've got to be mindful that we don't pursue growth at all costs, especially if it is at the cost of the average person. And of course, taxation is a big issue all around the world. In Australia, we have the opposite to most of the world. They're wanting to tax the people that make the money more and more in order to help the people that don't more and more. Now, again, there's a balance there that if you tax too much, people stop working, then you stop collecting. So you've got to try and find that right balance where people are happy to commit, happy to contribute, and happy to work extra to grow the economy naturally, and make sure that everybody can be afforded and paid for. And taxation has to be fair. In the US, it's the opposite, where they're trying to make taxation lower and lower. Donald Trump ran on the platform that he would stop taxing overtime and tips. I'm not sure how we can afford that when they're already in a massive $1 trillion deficit and $30+ trillion in debt. But it's going to be interesting to watch that space. And again, in Australia in particular, we're moving into the care economy phase, where the government is providing services above and beyond our belief and expectations, and that's coming at great cost. Now, I don't have a problem with the concept of looking after everybody, but it's how efficient is that system? How cost effective is that system? And that's my issue, particularly in Australia and globally around the world. I'm seeing the cost of those care that is escalating or out of control in many, many places. And we have to try and think of how can we do that effectively and efficiently if we want to make it sustainable in the future and economically viable to last as long as it can. As society, we've totally changed. We're now worshipping our smartphones and the information that it provides. And that's going to be a massive shift that continues to gather pace as we go along. What it has done to me is mean that we now accept the unacceptable. Things that we should be outraged about, out of control, frustrated and furious, we seem to say, oh, well, that's okay because I can get distracted elsewhere. Things like, Ukraine, with Russia still in there. The hundreds of millions of people that live in Russia don't seem to want to say, stop that. Israel, no one seems to stop that. It's crazy that we're all, I think, distracted by what's going on in that social media to the point where we let things slide that we otherwise probably wouldn't. But what we have seen is that we've got what I call the blame game at a whole new level, where if something does go wrong, they want to go on a witch hunt to find out whose fault it was, what they should have done to perfection to have stopped it happening, as if someone in the heat of the moment, in an instant, could have changed the outcome. So to me, I think we need to back off the blame and be more accepting that sometimes accidents do happen, mistakes do occur, and let's not aim for perfect, let's aim for reasonable. Now that used to be the legal standard. What would a reasonable person do in this circumstance? But now if you look at the way things are touted out there, it's what would a genius that never made a mistake and was perfect. That's the new standard, and that's just unachievable and unattainable. We do have, because of that, I think, a lack of self-reliance, because people are so quick to say, it's not my fault, you have to fix it. No, you have to take personal responsibility for yourself. And then again, we need to do that as a society, and that has to be taught in the home. It can't be done by government. It can't be done by outsiders. It has to be taught in the home. And we tend to spoil our kids a bit too much, where we need to teach them some self-reliance. We've also got a situation where we're now rewarding infamy. There's so many things now that you get, financially and socially rewarded for doing bad things. Trump, as an example, is president, even though he helped incite some actions towards the Capitol Hill when he went out. So this infamy being good has to stop. We have to look at standards, because we have to do it. And if we don't, we're complicit in those actions. Even if you've got nothing to do with it, you're far away, you've got to accept a level of responsibility and blame, that does come with sitting there. And that's where our moral standards have slipped. And we need to start bringing those back and try to say, look, what do we as a society expect genuine quality behaviour to be from our politicians, from our employers, from ourselves, from our family, from our friends? Start looking at what those are. Otherwise, we're going down a very, very slippery slope very fast. And role models these days have changed from people of high integrity, contribution, to people that really just have popular or have something silly or did something weird. So you can get a gazillion views on your YouTube account for doing something crazy, but something sensible will probably never get seen. So we need to look at that as a society and say, look, where are we going to find our role models? And if you look at it even with our TV and our day-to-day life, we're not seeing those being put forward and say, hey, this is the way to be the gold standard. So we do need to look and encourage that more. And that's, again, comes from us demanding it, not being complicit, not rewarding that infamy, but reward excellence, reward genuineness. That's the sort of thing we have to do as a society. And I think we live in what I call a confusion chaos. There's so much confusing and conflicting information that nobody knows what to quite do. So we need to look at that and say, hey, is this the way we want to live, or is there a better way? Now, I don't think we can change a lot of those things, but I do believe we are past the point of no return. I think it's too hard to reverse and go back to that old way, old society, old-fashioned values. We can't do it en masse. So the thing is, if you can't change it, you have to adapt. So the key element here is that you have to recognize that things will never be the same again. Now, that doesn't necessarily mean that they're worse. It can also mean that they're better. Technology is helping us. Social interaction is theoretically a good thing if it leads to physicality, etc. So we have to define whether we can make things better in this world, and we have to commit to that path. Otherwise, they will get worse. We want to have a look at what's going on in the world from a financial perspective, at the governments, at the corporates, and it's scary when you look at the numbers. And I think the problem is nobody ever does. But you've got billions of dollars being wasted, trillions of dollars being moved that no one knows, and the effectiveness of what we're spending our money in good view. We're saying, hey, this is a good thing to do, but the way we're doing it is not getting the outcomes, the results that we would want to achieve. Education, social support, these classic examples. We're spending more and more and more and not necessarily getting better outcomes. What we have to do is look for that clarity of information, because I think that's the thing that's hard now, is we can never get a straight answer from people. We can never get a real fact. And we're looking at headlines rather than looking at stories. We're not looking at reporting, we're looking at opinions, and that's a dangerous thing. And one of the reasons is we're getting most of our information from social media, which is not necessarily factual, reliable, or true, but is there and available. And so we're having a knowledge increase as a society, but I think we're having a wisdom on the decline as a society. And that's troubling. We want people to get better, improve, smarter, more knowledgeable, more capable, more compassionate, more helpful. That's not, I think, where we're going as a society generally. But thank goodness there's always some green shoots. And what we want to look for here is the fact that opinion is getting more dominant over fact, and we have to reverse that. It's critical we do that because fact is fact. We're seeing now people hold firm in their arguments because they heard something was this. And despite producing evidence to the contrary, they will not change their view because they believe their source of information, albeit being shady, is more supportable than the facts on the table. So we need to change that as a society and let people be bendable. None of us ever know the full knowledge, but you can go and research and find out and go to source documents and go to direct video evidence. Go to find the real information before you hold stead on your opinion. Have your opinions, but make sure they're well supported, well knowledge, and independent of other people's opinion, other people's distortion of information, and then you'll be fine. And of course, the salvation of the nation is on the way. Artificial intelligence is now here thick and fast. And the truth is, it's not really on the way. It's been here for a while. They just didn't let us know. But this is meant to be the solution. I'm not convinced. One of the reasons for that, and I have skepticism, is that AI can only be responding to the information readily available. So it's where it gets its source of information. So if we as humans aren't processing the right information and we're getting the right outcomes, then AI will only do it worse than us. So we've got to make sure that what it gets fed is appropriate, responsible, and helpful, not distortive, etc. So AI, I find scary. It's a reality, it's coming, it's going to change the world, no doubt, but for the better, I'm not sure. Now again, I don't want to be alarming. I just want you to realize that the game has changed. And when the game changes, you need to think differently. What you thought 5 years, 10 years, 15 years, 20 years ago does not apply in the modern age. And if you don't change your thinking, you will not survive this change. What we do have to look at, what is the new affordable? And that's at all levels. You look at housing, it's more expensive than we want, but that's the new affordable. You look at food, we're paying crazy money for things like Uber Eats delivery. You could cook it at home at a fraction of the price. All you have to learn is simple cooking skills, but we don't want to do that. So we're willing to pay a lot. Now that's not an issue if you can afford it. So what we're having is a world that has generally more affluence in the Western economies, and therefore people are just relaxing and not doing the necessary things. But that, I'm not sure, is sustainable. And we have to think about that as well as. And this justifiable value of what we are being provided, whether it be the goods we buy at the supermarket, whether it be the services we get at the hospital, whether it be the government expenditure on roads, no one seems to be checking if it is a real true cost or if that's just what we've been told. And you can go and research this stuff for yourself and see what we're being charged for roads, railways. It's billions of dollars, and I can't see where all that concrete, where all that rebar, where all that labour is. I'm not sure who's checking with their calculator to say, is this right? But you have to find safety, and the way you find safety is get out your calculator. Like I say, if you want to know what the cost of a road is, say how many tonnes of cement, how many hours of labour, how many metres of rebar, and just work it out. I'm pretty sure it'll be less than that. Have a look at where something like a share, it should be calculable against a dividend yield. If that doesn't work, be careful. So learn to use your calculator in the new age, because numbers don't lie, people do. So get your calculator out, have some fun with it. And you need to realize that we are in a protection of wealth environment. And I say that because we've never had such ease of fluid of transaction. It's a digital economy, which means shares can go up and down, move left and right. And if you don't know where your money is, it's likely it is available and susceptible. So you need to look at protecting your wealth, not just chasing strange profits, but saying, okay, what I've made, I have to protect. Reasonable risk, reasonable return, reasonable application, and know what it is. Don't get lured down dark alleyways with your money, because it's easy to hand it over, often it's hard to get it back. And in my mind, the family home has never been more important than today. And if you don't have your family home, if you aren't paying off your family home, get out there and do everything possible, a second job, two incomes in the family, whatever it takes to get into your family home sometime soon. And if you can't afford the one you want, get the one you can afford. These are values that have lasted decades and centuries. Bring it back in your life. If you can get your family home, particularly in Australia, where they're not getting any cheaper, then you don't stay on the rental cycle. You don't have to worry about how expensive housings are becoming. In Australia, we're all worried about the affordability of property, but the fact of the matter is that 2/3 of all properties are owned by people that live in them. Those people are happy that they're becoming less affordable because they already own it and they're therefore making a profit. Become one of those people, especially in Australia where the family home is a tax-free capital gain. Take full advantage of that. It's paramount to your future survival in any environment. And you've got to focus on income. Get a good job, upscale yourself, work extra. The digital economy is generating incomes. You've got all sorts of options available. Try and get your income up as high as possible, but don't waste it. Do something constructive. Put it towards paying off your house. Put it towards improving your family. Something good. And then what you need to do is train your family. Now, train is not lecture. I don't want you to go and start telling your kids they don't understand, they've got it wrong, that's not how it's meant to be, because it's likely you might be the one that doesn't understand. They've grown up in this new world. They're going to be exposed to it far more than you will. So what you have to do is work with them. Train them to understand what risk is. Train them to understand where things might sound weird. Train them to find quality information. Don't lecture them. Now you've got to remember, your kids in particular are going to inherit your wealth one day. They're going to look after you perhaps in your old age and retirement. So you need them to be capable and strong and financially aware. So train them, don't lecture them. If you do that, you're 90% towards a solution. You're 90% towards fixing the problems that'll come your way, but you'll be able to deal with them. And I believe that everything is fixable in society in the home. And this is why we have to learn to be better parents, better humans, better brothers, better sisters. That's what's critical. And if we understand the environment we're in, we can not only survive, we can thrive. So that's my little bit of a rant. Again, I'm telling you this because we are definitely in changing times. We have definitely gone past the point of no return. So don't wish that things were like they used to be. Understand how they are and get ready for the changes that are coming too. If you do that, you've got a lovely life waiting for you. I'm going to stop it there on that matter. I'm going to get stuck in now to our financial issues. I'm going to start, as we usually do, with the stock markets. And we've seen the stock markets have some pretty good days this last 12 months. We still have the volatility, we still have the risk, we've still got issues going on, but virtually every market did pretty well, as I'll show you in a sec. Now that's because there's too much cash, there's a lot of investable, there's positivity, there's profitability, there's volatility, there's manipulation. All of these things are now going into the stock markets and driving them in directions that generally tend upwards. But what we are seeing is that the USA supposedly had the best return. Now, where that was confusing to me is if you've been watching the US election, apparently they had the worst economy. One of the big platforms that Donald Trump got in to be the new president, or the returning president, was the fact that he said the economy was better under me. You're in a bad economy. But the truth is it's not that bad. But again, people have been brainwashed to believe, oh, it's better now than it was before. And I don't think that was overly the case. It's generally the same. I mean, bear in mind, Trump left in the middle of COVID where it was particularly bad, but somehow everybody believes it was worse now than then. Doesn't make sense to me, but that's just how it goes. But even if you believe that it is a bad economy, as Trump would say, how come the stock market's doing so well? And that's the confusion and the chaos that runs in today's society. Nothing seems to make sense. And inflation has been blamed for a lot of the issues, good and bad. But again, inflation was expected to be after COVID, when everything stopped and went down. We were going to have high price lifts after that. Probably too much. People have got away with a bit of profit taking. But again, it's not that big an issue to me in society as it's made out to be. You know, all you have to do to stop inflation is spend in the sales. You know, change your habits, get off brands. There's lots of ways that you can beat inflation as a person, as a business, as a society, but they don't tell us those because they're happy to keep charging a little bit extra, making a little bit more. And volatility is still there and is going nowhere anytime soon. You know, the reason being, none of us are paying attention. They're moving those markets up and down. Last year, I talked about the fact that we had mini crashes in the stock market on a regular basis. That has not changed over this last 12 months. Now, they're moving the market 5–10% on rumours, on speculation, on possibilities, and that's making them extra money and turning millionaires into billionaires, and now billionaires soon to be trillionaires. And let's see what happens there. But if you do look at that and get your calculator out, as I mentioned earlier, some of these price points are shocking. They don't make sense financially, but somehow that price is holding in the market and in some cases going up, as we'll see. So is there a cause for concern in the stock market? Generally speaking, I think yes, in some points. But if you get your calculator out, if you look for value, if you follow the trends of where the money is going, I think you'll be generally okay. But I do think there is significant cause for concern at some of these price points, particularly in the US market. So look for things like price to earnings ratios or PE. You don't want to get too long. The higher the number on a PE, it's the longer it takes to get your money back from current profits. So if it's going to take 20, 30, 40, 50 years in some cases for you to get your money back, that's too long for me. I'm not sure I'm going to be around. Look at yield. If the yields are under 2, 3, 4%, that's not going to help you beat inflation and live a wonderful life. And it also is an indicator that maybe the share price is overvalued based on its true underlying fundamentals. So there is concern in some cases and there's opportunity in others. But generally speaking, I think the market's going to have a reasonable time. Now, if we look here, this is the All Ordinaries and the FTSE and the Dow over the last 2 years. And we can see here, for the last 2 years, the Dow has gone up 40%. 40% over 2 years, 20 year on year. The Australian market up 25 and the UK up 13, despite the UK market allegedly being a soft economy. So again, the markets are moving and trending upwards, but we can see these volatility points on a regular basis. So this is what I call a mini crash, a mini crash, a mini crash, a mini crash, which shows you that they can move the stock price up and down to make profits quickly, but keep the trend line going so you and I don't worry about it, and we still pick up the crumbs. They get most of it, we get the leftovers, unless you get in and pick up the individual bonuses. If we have a look at the stocks that we always look at each year, and again, this is a reference point, this is not a recommendation. I put these up as the same stocks every year just to show you the trending of the world and the strangeness of the world. Now, if you have a look, there's BHP. It made $7.9 billion profit this year, down from $12.9 billion the year before and $30 billion the year before that. No surprise, its stock price went down by 5.8%. And if you have a look at the other ones, excuse me, if you have a look at the other ones, HSBC had a record $22 billion profit. Its price, unsurprisingly, went up 18%. Bank of America up a crazy 39%. Now there's Commonwealth Bank. Its profit went down and its share price has gone up 41% year on year. And a reminder, we do this at the 9th of September each year because that's when we started all those years ago, and we keep the same reference point. Now, Commonwealth Bank is a classic example of something massively overvalued. If you get out your calculator on Commonwealth Bank and its current dividend, I've always believed a bank dividend should be about 5%. Commonwealth Bank's dividend at the moment is 3.5%. Now that gives it an implied value, current dividend at 5%, of approximately $95, but a share price is $150 and almost got past $160. That's a classic example of something being overvalued, whereas if you look at something similar like an ANZ, its dividend instead of 3.5 is 5.5, it's undervalued on the same 5% yield analysis. So you're looking for something that is dangerous to avoid and opportunistic to take. And you need your calculator, you need common sense, and you need to stop the noise in recommendation. Go do it for yourself. If you look at Microsoft, unbelievable, 20% profit again on an $88 billion after-tax income. Now again, this is this fairness and equity. How much profit does a company need to make? $88 billion. Congratulations. I think it's a wonderful thing. They deserve it. They've changed the world. But as a society, should we be giving them a significant tax cut? I'm not convinced. Pfizer, no surprise, had a terrible year. Only $2 billion profit. Oh my goodness, they must be in dire straits. But look previously during COVID, how massively profitable they were with 31 and 24. What a coincidence. Good to know there was no profiteering from COVID. And this is in plain sight. This is not secret information that I had to go in and go through a window to find. No, this is publicly available information. And this company made $50 billion during the COVID period. And we're as a society saying that's okay. Now again, half of you will say, they deserve it, they saved the world. The other half is saying, where's your humanity? The world was at risk. Shouldn't you just be helping them and make a modest profit, not a massive one? Again, two tales, two different stories, two different paths, two different answers. I don't know which one is right. But if you look at Coca-Cola, it's $10 billion, 23% profit year on year. That's phenomenal. So you can see these are great results. These are huge profits. And this is what I'm saying. The numbers are becoming eye-watering. But we're accepting it and saying that's okay. If we look at overall, there's the Dow Jones, 18%. There's the All Ordinaries went up 10%. And the UK, which is apparently the softest of all of those economies, went up 20%. Now, it was recovering from a negative last year. We picked that. But there you go. It's pretty strong. Now, from a stock market point of view, my first prediction is I don't think we're going to have a bad year next year. I think we're going to have another reasonable year, maybe a bit softer than this year, because I think the price points are too high, certainly in the US. But I do think we're going to see ongoing volatility because it's the new nature of the beast. But we're going to see upward trend. But check your individual stocks. Make sure you're not loading up on stuff that is already overvalued, because if it's overvalued, it's not likely to continue. It's not that it can't, but it's not likely to continue to go up. It's more likely to come down. If it's undervalued, the opposite. It's more likely to rise. So get that calculator out and check. Just as a reference point, and I've been saying this for the last few years, it's hard to know what should happen in anything in the world, because if we look at Bitcoin, which is officially something that is worthless and has no value whatsoever, there is zero asset backing at all. And again, I'm not here to say Bitcoin is not something genuine, crypto is not there. It is, okay? But there's no argument that it has no financial backing whatsoever. So I don't buy into the theories that this is a new financial instrument. But this is society changing. We're saying this is what we want. Now, the reason Bitcoin has value, and you can see there, phenomenally, it went up 120% year on year. 120. That's significantly more than even Commonwealth Bank at 40%. Bank of America, 40%, pales into insignificance when you look at Bitcoin at 120. But these are real. This is speculation. The key reason we've seen another surge in Bitcoin, and we've seen them in the past, it's about to go through 100,000 US dollars. Unbelievable. But the reason is, there is now 617 million people that have a crypto wallet, up from 500 in just 1 year. 100 new people buying into the agreement, buying into the understanding, buying into the belief structure that crypto is real. And if they believe it's real, it is. And you cannot deny them that they've made genuine profit. It's just not physically real. It's emotionally, it's psychologically, it's pack real. If we all believe it, it's fine. And to give you an idea, is the market capitalization of Bitcoin, as I present this here in December, was $1.9 trillion. So as a society, we have officially said that something that is nothing is worth almost $2 trillion. And as I said for the last few years, if nothing is worth $2 trillion, how much is something worth? So it's impossible to know the right answer to that. Impossible. If people believe, it's real. If they don't believe, it's not. Now, the danger for cryptocurrencies is that they'll keep flocking in and pushing that price up whilst they believe that the profit is still to come. But as soon as that profit doesn't materialize or the fear of loss comes in, that belief reverses its momentum from positive upward to serious downward very, very fast. And if there's nothing there, then it falls extremely fast, as it has in the past, as it will in the future. But the wild card is, will all these 600 million people hit reverse, or will enough of them be able to stay in and hold the line at some acceptable point? But mark my words, it'll go up, then it'll come back down, everyone will lose belief, then it hits a point where they say, oh, what do we got to lose? It'll happen again. And they come back, and away we go again. So this is phenomenal as a society. This is one of the key issues of the point of no return, is that the digitalization of alleged money, you can call it speculation, you can call it gambling. Bitcoin believers, crypto believers call it real and genuine. And it is, because they make it that. But it doesn't make it fundamentally real. It doesn't make it safe. So be careful. But you need to have awareness. It's not about being right, it's about being aware. Let's move on to currencies now. And here is the Aussie dollar against the US. And you can see in the last year we were down around about 62 cents when we did this seminar, and correctly we saw it go backwards upwards to about 68 cents US. And I believe, and still hold my view, that 70 to 75 cents is the natural range. But you can see then the dollar just lost strength and momentum, and it sat around about the 65 to 67 cents most of the year. It peaked back up to about 68 and a bit, looking like it was going towards 70, and then ran out of puff, and in the last little while, it's just fallen a bit off the cliff. Now that's because the election in the US, there's belief that the economy will boom, but even with all that, I don't believe that should necessarily strengthen the US dollar, because the booming economy doesn't necessarily equate to better government revenues, to a lower deficit, to general overall improvement. It'll make certain people very rich, but I'm not sure the dollar should be going with it. And the thing we've got going on in the US is that, ironically, Australia, out of all governments, has the strongest balance sheet. We have the least amount of debt per GDP. We have the smallest amount of deficits, even with all the spending that's going on. So theoretically, the Australian dollar has fundamental logic to improve, but yet it isn't. We also don't have much debt in Australia as a result of GDP, 20, 30, 40%. The rest of the world is 100, 120% of GDP, but no one seems to care, because they just print more money, they just issue more bonds, everyone seems to care, and as long as there's volatility in the currency, they can make money trading it, because the currency has now become a commodity. And that helps them when they move the currency in these bands of 5, 10%, they're making money on the movement, they don't need to make money on the trend. And that's why things have changed very much here, and we are definitely past the point of no return with currency, because it's gone from being a measure of a country's wealth to being a commodity that can be traded aggressively in any direction. So again, I don't think this changes my views on what the Australian dollar is worth. So I'm going to go out on my prediction, as always, and stay in the 70 to 75 cent range, because fundamentally, given the balance sheet of the US to Australia, given the position where Australia's economy is less in debt, less deficit, and we have strong exports, I still believe that the Australian dollar should not be this low against the US. But I'm likely to be totally wrong on that one. So my belief is still 70 to 75 cents, which means the 64 that it is today is theoretically a bargain, but the society will decide that. You know, I'm not going to change my view. I'm going to hold 70-75% with expectation of error. But, you know, right now, it's theoretically good value to send money to Australia and see how you go. Good luck with that. If we have a look at interest rates, we've seen interest rates go up. Now, last year we said that the interest rates have gone up too fast, too quickly and too much. But it wasn't that they've gone too high. You know, everyone forgot that we haven't gone past our normal. We've just gone back into the normal range. And that's the key. Now, we did have that one rise of 0.25% in November, and then we've had no change since then for just coming on a year. Now, that's, you know, a little bit surprising to some, but not to me. I think we're probably at the right point. Now, inflation is still mainly the reason why they have not dropped interest rates as they have in the rest of the world. But again, I'm not sure that interest rates would have an impact on inflation anyways. I think the way the economy is structured is having a bigger issue there. And inflation is now normalising. And people forget one of the reasons it normalises is because if it went up a lot in a year so it gets a high number, the next year it isn't going to go up as much, or even if it does, the same amount of rise on a higher number is a lower percentage. So it has a natural tendency to flatten out anyways. So I don't think we're going to see any more. And I think we're back at normal. Now, again, if you look at the long-term rates, Australia has usually been at 4.5 or above. The only time it wasn't was during the GFC and COVID. So if you want rates to be cheap again, no problems. We just need another massive world problem and you can have them cheaper. But I don't know about you, I'd rather have a little bit higher interest rate than a much more devastated global economy. But that's up to me. Now, inflation is back in range, which means it opens the door for the RBA to start reducing rates if it wants to, as it has done everywhere else in the world, okay? But I'm not convinced that they have an appetite to reduce rates. I think they're looking at wait and see. And I think largely because we're back in our normal range. And I think they're happy at around that 4%. Now, again, you've always got to remember that interest rates is a double-edged sword. It hurts borrowers, you know, if it's too high. It hurts investors if it's too low. So, you know, we don't want it to be too cheap because particularly now, there's a lot of people with superannuation, there's a lot of people that are selling their houses with cash and downsizing. They need interest rates to be at a reasonable level so they can put the money on fixed deposit and live off that. If it goes too low, they're not going to generate sustainable living incomes and they'll need government support, family support, etc. So just always remember there is a two-sided coin. Now, my prediction for interest rates is I think we are past the rising point and I think we are now in the reduction point. So I'm going to go out and say that over the next year, there's most likely to be a reduction of probably 2.25 amounts. So I should see interest rates in my mind come down by 0.5%. Now that's going to start to make fixed rates more attractive. You can consider those. But I think there's going to be a general reluctance to do it. We've got an election coming. There'll be some pressure to do it as a result of the election. But we'll see what the RBA does. They've been immune at the moment despite a lot of political pressure to reduce them. So let's see if they change their mind. Right, in terms of property, and with property, I always start with migration because a reminder, and I've done this for the whole 18 years of these presentations, the most important factor in property price growth is population growth. And again, not just population for the sake of population, but more importantly, affluent population. Now, we look at the numbers to last December, we're at pretty much record levels now. Australia had 2.5% Australia-wide immigration growth, population growth. We are now over 27 million people because we were at 26.966 last December. So we've officially gone over 27 million people, which is a significant jump. And you see last year we had 650,000 more Australians, around about 150, 200,000 natural births. The rest is migration and expats returning, and that's not going to slow down. Now, it's a real political hot potato at the moment. Everyone's blaming migration for the property price rises, etc. Not true, by the way. But what it does do is it keeps the economy alive. We saw this week the GDP growth numbers come out really, really soft. And the only thing that's keeping things moving in the Australian economy is government spending and migration. Because every time someone moves in, they have to buy a bed, they have to buy a car, they have to get somewhere to live, they have to build a house. These people are what is keeping our economy up. And I always remind people that if you've got 2.5% population growth, think of it like a business. If you've got 2.5% more customers, you should have 2.5% more sales. But I've always known the Australian economy is inefficient and non-productive because our retail growth hardly ever gets over 0.5% growth, and these days is even less than that. So theoretically, our retail growth should grow by 2.5% a year because that's how many more customers we've got. But it demonstrates how weak our underlying economy is in Australia and how propped up it is and reliant on new migration and to a less extent the government spending crazy amounts of money. You can see here New South Wales kicking at 2.2. Now, not that long ago, it was sitting at 1.1. During COVID, it was 0.4, 0.1, and we've had bounce back. Now, this will taper off a little bit. And one of the things a lot of people also forget is that even if the government changes immigration policy today, most of these people got their visas years ago. And when you get your permanent residency visa, you have 5 years before you have to come down and either move to Australia or extend it until you do. So a lot of the people coming aren't people who got their visa yesterday, they're people who got their visa 3, 4, 5 years ago. So you've got to remember that even if they change policy today, there's up to a 5-year plus lag before it's necessarily going to slow down the pace. The issue here is Australia's just too nice a place to be. Now Victoria has gone from being a minus growth to the highest quantum in Australia, and that's why that property market is starting to get green shoots of recovery and the rental vacancies are dropping because the amount of people heading to Victoria now is escalating and it's the highest quantum in the country. You know, WA is the highest percentage growth at 3.3%, which is crazy. But being a Perth boy, and as I do this seminar, I'm in Perth, I know why, because it's the best weather, it's the most affordable, it's the least traffic, it's the most enjoyable place in the world to live in my mind, but I'm biased. But apparently everybody else agrees because 3.3% population growth, there's a rush to come. And you look at everywhere else is doing well, and this is what's driving our population and our property prices and all of the economy that's otherwise sluggish. Now, these people are coming qualified or cashed up. We don't have a lot of bad migration. Most of this is quality migration. And the thing I keep reminding people, particularly in the budget seminars, these are also taxpayers. Thank goodness they arrived, because that's what's fueling the record revenues for the federal government and the state governments. Without these people, they wouldn't be able to spend on NDIS and Social Security. They'd be running out of money. So you welcome these people, embrace these people. They're improving the place. They're not the ones responsible for the housing issue, which I'll prove to you shortly. But we need this to keep the economy safe and stable. And let's face it, we all just arrived a while ago, unless you're a local. If we have a look at why they want to come, Australia is officially the most livable country in the world. And I say that because 5 out of our cities are in the top 16 most livable in the world. No one else has got that much representation. Now, Melbourne used to, for many years, be the world's most livable. It slipped from 3 to 4 this year. Sydney slipped from 4 to 7. You know, Adelaide improved from 12 to 11. You know, Perth went from 12 to 15. I think that's because you can't get dinner after 8 o'clock anywhere. But Brisbane is 16 there. So this is why people want to come. This is out of all the cities in the world, 5 out of the top 16 are in Australia. If you're thinking about where you want to bring up your family, where you want to live, where's the nicest place to be, where's the most affordable, nice housing, it's, believe it or not, Australia. And that's why they keep coming. And this is free advertising every year, thanks to the Economic Intelligence Unit. So this is really, really important that we accept it. Now, the problem with Australians is we take it for granted because it's standard. But the rest of the world goes, oh my goodness, I love some of that. And they're coming, we can't stop them, embrace them, welcome them. If we look at the property market, that population is one of the key reasons why our property market is safe and growing, but it's not the dominant reason. It's not even in the top 3 or 4. But what it is, the big thing at the moment is we're seeing the baby boom downsizers selling their houses at significant profits. Because it's their residence, there's no capital gains tax, no matter if you made a little or a lot, and then taking that money and downsizing into replacement homes of similar value but smaller size. And they're paying cash. And they've still got money left over to renovate, to buy some toys, to put into their superannuation, to help their kids. That's the big driver, the number one driver in my mind at the moment. And there's not only just downsizers, there's some profit takers. People that have been in their house saying, oh, let's take that money and let's upgrade. That's always been the traditional market, but now the profit quantums are so much more significant than they ever have been. So this is a very big factor of the market. And the migration is definitely there, is a big issue. And the thing that a migrant has different to a local, he knows how expensive property is everywhere else. An Australian thinks, oh my goodness, this is a rip-off, but it's not a rip-off if you come from Hong Kong, where it's 3, 4, 5 times the price for half the quality in Australia. So Australians will eventually figure that out, but the migrants already know it. And we've got general affluence. People are earning more. People are getting more overtime. They can drive their Ubers. They can do all sorts of things. So the general affluence of the economy is there, even though it is tight and hard. It's never going to be easy life. It's not meant to be. But we're genuinely better off than we were 10, 20, 30 years ago, and that's just a simple fact. And of course, inheritance is something I've been telling people for the last 5 or 10 years, but we're really seeing it happen now. But what's interesting is it's not just inheritance on death, we're seeing inheritance during life. So people are getting money released from their families for deposits, people are getting money to help, people are giving gifts. It's incredible how much this is happening because our society in Australia is now genuinely affluent. And what that basically means is, for pretty much the first time, I'm willing to share with my family because psychologically I believe I've got enough for me. In the past it was, oh, I don't know if I can give you that $10,000, I might need that for my holiday. But I think, oh, I've got my holiday covered, here's a bit of help. So that's what that inheritance and affluence does in our society. And of course the digital economy is going gangbusters. You could have a MyFans page, you could be driving Uber, you could be on your Shopify site. And believe you me, the money these people are earning is phenomenal and scary, and again is giving young people in particular incredible income power that our generation, my generation, did not see or exist. So don't feel sorry for the young. They'll just go and invent an app, create a Shopify, go on MyFans, and they'll have way more money than you ever imagined. What is going to be interesting is, and I've been predicting this for a while, the ATO is getting more and more active, more and more intelligent as how it finds people in the digital economy. Because a lot of people that do MyFans, Uber, etc., all go, oh, I don't have to pay tax on that. And that is not the case. All of those activities are fully taxable, and the ATO is looking for it all the time. So particularly if you're an influencer and you're going, oh, look at all the publicity I'm getting. Isn't that wonderful? Well, one of the people looking at your publicity is the ATO, so be careful. Declare it, pay the tax, you should, it's necessary, it's required. One of the things that's going to emerge as a big issue in the property market in the next 1, 2, 3, 4 years is this obsession now, particularly with the Labor government, to provide social housing. There's a lot of pressure for the government to say, hey, bring in social housing, help the affordability crisis, etc. Now, the problem I have with that is it's going to create even more competition for resources, for labour, for land, and it's going to distort the market, and I think it could make it worse for everybody else. So it might be better if you're on social housing, but I'm not sure you're going to like it. One of the programs is they own a portion of your house. If it goes up in value, you've got to pay the government back with that profit later on. So it's going to be interesting to see this space. It's going to be the hot topic over the next 3 years. And of course, the big issue is that at a time where we have more than usual drivers of growth potential, we have less and less new supply coming in. And the only way you can keep housing affordable is to create new supply to satisfy the increasing demand. There is no other way. Subsidies don't work, incentives don't work, government provision doesn't work. It's you must have quality supply coming in the market that the market wants, is willing to accept, and try and make it as affordable as possible by removing costs. And we'll talk about that in a second. But at the same time, not only is new supply very hard, but there's a genuine scarcity across the board. Now, Australia's traditionally had 5% rotation of its property, which means on average, once every 20 years, a property comes up for sale. It's pretty much still like that. So if there's more and more people coming in, more and more people selling, more and more people looking to buy, we need to have availability, and that's not there. Now, availability will change in the next month, year or two, because of the fact that as a price point hits somewhere, I as the owner go, oh, I'm tempted to sell at that level. As it gets to my acceptance point, then I release the stock in the market. But the problem is we need 2 houses to come on the market, not 1. And there's not enough coming on even in that case. So people will get their price points if the property is justifiable and worthy. In terms of the cycle, everywhere is in a boom market except for Darwin. It's still just working itself out, largely because of population growth. It's slow or no population growth there. But anywhere you want to buy right now is safe and profitable, and likely, I think we are in the best time in the Australian property market ever. So if you have not bought, buy. If you own, congratulations. And again, all of these issues work fantastically if you already own the property, because do nothing and it's just going up in value. But 2/3 of the Australian property market is owned by owner-occupiers. They're happy. It's the 1/3 that needs help, and the 1/3 makes the most noise. So affordability crisis, not so sure. If we have a look and see, why housing is unaffordable, if you want to call it that. And again, I'm very, very angry at the moment because the government is looking to demonise landlords and migrants. It's their fault rents are up. It's their fault prices are going up. And it's simply not true. Now, they're just natural market forces. You're going to naturally have people want to buy property. You need to provide policies that encourage it to increase the housing stock and make it easy to do. But the supply solution is the only way that you can fix an affordability crisis. Bring in new supply. Rotation of ownership does not matter. If I sell my house and buy another established house, there's no improvement in supply. The only way you get improvement in supply is if I build a house, build an apartment. So we must have supply, and the government is in control of that because it sets housing policy, pricing policy, planning policy. And that's the thing, they are the ones causing the problem, not landlords. And you can see tax is the biggest problem, and these entry costs have now blown our minds. To give you an example, here is an average property price in each city. And I went back to 2000, and I did this as a result of the Senate inquiry. There's currently a Senate inquiry into housing affordability, and we lodged a submission on that where we looked at what is the real reason affordability is a problem. So I did the research, and here it is. You can see, back in 2000, a house in Sydney was $328,000. If you look at the first and main cost of entry, it's stamp duty at a state government level. Back in 2000, the stamp duty on the average house price was $10,000 in Sydney, down to $4,000 in Perth. But now, 24 years later, with the house price in Sydney going from 300 to 1.6, Perth from 150 to 730, you can see the stamp duty has escalated disproportionately. House prices have gone up 4 times roughly, but the cost of acquisition in everywhere except Victoria has gone up 6 or 7 times. Literally for just stamping a bit of paper. Now, the state governments will say, oh, they need this for schools and for roads and for all this. But do they need this much? I'm not sure. And bear in mind, they get this multiple times. If someone buys that property 10 years ago, sells it now, they get another clip. If someone bought it 10 years prior to that, another clip. So they can rotate this many, many times through the life of that property. The Sydney, New South Wales government has been sneaky. They're talking about making it an annual cost rather than an upfront cost. but that again is a distraction, not a solution. We want it to be lower. There's no reason it needs to be this high. If you want to bring averages down, cost and affordability down, fix this blowout. In income tax purposes, we call this bracket creep, where the incomes go up, but the rate stays the same. More people are paying more than they need to. Fix this bracket creep. Now, as if that's not bad enough, let's have a look at if it was a brand new house. So the brand new house, it's even worse. Now, before June 2000, Australia didn't have what calls GST, Goods and Services Tax. But when they brought in Goods and Services Tax, they left it on a home. Now, theoretically, stamp duties were meant to disappear, but they stayed intact 2 days. So not only do we have the state government charging stamp duty, but if I built this house instead of just buying somebody else's, then on a new property, there is GST inside. So if I went and bought a $1.6 million brand new house or a $1.6 million brand new apartment in Sydney, not only do I pay the stamp duty of $74,000, but inside the price, there's about $100,000 of GST. Now, where this is important to know is that GST is collected by the federal government, but is paid to the state government. So this is what I call a double dip. So you can see there, on a normal house, brand new, $180,000 in Sydney, 11% of the purchase price is government fee, all state government fee. That's crazy. So if you wanted to fix the market, you could either abolish GST, reduce stamp duty, or both. Now again, maybe the price doesn't change. Maybe the developers who are doing it hard in Australia, and we've seen a lot of developers go broke, maybe they leave the price the same, but the government gets less, the developer gets more to safen up the industry and encourage them to build more stock. Because if they build more stock, supply gets fixed and supply can meet demand. But developers are making way less than the government is per sale. That's not right. They've got to fix it. And then to make it worse is they want to discourage foreigners because they have another foreigner surcharge, which in Sydney would be 130. So with foreigners who have never been more than 4 or 5% of the market, they're discouraging them by making it a $300,000 cost. Now, the great thing about foreign investment into property, they don't live in it. So it's available to rent. It helps buildings get built that wouldn't otherwise get built. So we should be encouraging this, not discouraging it. And that's how it goes. Now, in truth, I think what we should do as a society is let's stop advertising the property for $1.6 million. And let's start advertising it as 1.4 plus tax. Because that's the only way as society we're going to wake up and realize that it's the government causing the problem, not the developer, not the migrant, not the industry, not the landlord. Let's start marketing every brand new property as cost plus tax so people become aware of this massive distortion and hopefully it can remedy. Now, if the government was serious about helping affordability, this is a quick and easy fix. And this is not going to hurt their revenues because this is windfall. They weren't expecting these sorts of numbers. It's windfall. They don't deserve to keep them. Let's make it better. So that's, the reality of the affordability crisis is the government. Now, if we have a look at the overall property market, Sydney in the last quarter went up 1.3, which is great. Melbourne went down technically 1.5, but not in the quality market. But year on year, it's down 3.5. Now, if you remember last year, Melbourne was down 13%. So it has fixed itself. And the reason for that, its population growth is now the strongest in Australia. So expect that to go from negative growth to positive growth very, very quickly, just out of population demand. But you can see Brisbane, Perth, amazing, 26% growth in prices. 13% in Adelaide, 14% in Brisbane. And Perth's momentum is still there and real. Now, the irony is the reason it can grow that much is because its price is still very low on the national average. One of the reasons for that is it's been a dead market for a long time. So most of this growth is not magical, it's catch-up. We saw the exact same scenario in Sydney a decade ago where it did very little and then it caught up. But if you look at the long-term rates, 10, 15 years, the market is consistent and reliable, always has been, always will be, because of lack of supply, because of strong migration, because now of the downsizes. So expect these returns to be there. Now again, I'm on record and I'm going to stay there saying I don't think we're going to see the old rates of return where we used to see 8, 9, 10% growth regularly. And in the old figure of speech was a property doubled every 10 years. I don't think we're going to see property double every 10 years. I think it's going to go up in value the same amount in the next 10 years as it did in the last 10 years. So if you had a property that was worth 500 that went to $1 million, I think it's likely to go from $1 million to $1.5 million. Now the exception is high quality. High quality is going to outpace these averages and do better than that. So the better the quality, the better the property, the better things are. And you can see Australia-wide average 7, Australia-wide average is $1 million. And again, if you look at the average in each state to the national average, there is Sydney still significantly higher than the national average, plus 58. But you can see Perth, and this is what we've been predicting this last couple of years. We said Perth was too cheap based on the national average, and it had to get closer, and that's exactly what's happened. It's moved from 48 to 30% discount. Brisbane was too cheap, so it's moved naturally from 25 to 16. This is what happens when you are out of fundamentals, out of distortion. It will eventually correct. So we're getting back towards where we should be with those numbers, but there's still more scope for growth as that population in Perth is still growing at 3.3%, as the population in Brisbane is growing at plus 2%. They're the drivers of that property price growth, pushed by scarcity, pushed by lack of supply. So this market is going to be very, very strong for at least 3 to 5 years. If we look at why I believe that, and this is the key indicator, vacancy. Now you can see here, everywhere but Melbourne and basically Darwin, Hobart, the small places, is 2% or less, which is well under the historic averages. The Australian average of vacancy is 1.6%. That's ridiculously low. Perth is 0.5, Adelaide 0.6, and hence why we're still getting rent rises, because there's demand and there's scarcity. If they've got too many people wanting to rent, not enough properties available to rent, prices will rise. But this lets us know the market is fundamentally safe. Now we need more supply to bring prices back to affordable. Until that happens, expect above average growth. So my prediction for the property market is, I believe, particularly in Perth, Brisbane, Adelaide, where there's massive low vacancy, massive population growth, outperforming the average, and the average is now 7%, it'll outperform the average. Sydney to be very, very strong because there's no place to put things, and Melbourne to be very, very profitable. It's going to move from being a bit negative psychologically to positive. The population is the highest quantum in the country. It's looking good. So I think we're going to have a great year ahead in all parts of Australia. Get yours. Again, why do I think that? Well, you can see here, housing loan commitments are starting to get up, people are getting more active, but approvals are still dormant. Now, again, household wealth is on the improve, so if affluence is improving, supply is low and stagnant, and people are getting more active, that all drives prices up. Now, interestingly, I've put here that the Sydney average way back in 2012, where that graph started, was 450,000. And now in June 24, it's 1.6. So there's a 4 times multiplier. But you can see in terms of total loan commitments, it's gone from 12 to 30. That's only a 2.5 times multiplier. In terms of investor, it's gone from 6 to 12. That's only a 2 times multiplier. Now what that tells you is people are borrowing less to buy the properties. Because theoretically, the loan quantum should be going up by the same multiplier as the price. So people are borrowing less to buy. So that shows, again, market stability. If there's less debt in the system against the percentage of the property value, there's less pressure. And so all these people that hope that people go broke with interest rates high and they sell, that's not going to happen because the numbers don't support that argument if you look at the truth. The speculation is strong, but the truth is contrary. So this is why I believe we've got a strong market, likely for the next 3 to 5 years, if not longer. If we look at finishing off, what happens? Well, you've got to look forward. Importantly, you've got to know that the game has changed and you've got to adapt your thinking, your behaviour to adapt to the new rules. Don't complain about it because the rules are going to overwrite you. So try and adapt and learn. You've got to remember the good old days were the good old days. They're not coming back. You'll never buy property that cheap again. You'll never be able to do the things that you used to do so freely. Airfares won't be as cheap as they used to be. So what was is was. Stay out of the past. Look forward to the future. But don't underestimate real momentum. And this is a classic example as the cryptos and the bitcoins. It's real momentum if enough people believe in it, because that's what makes it real. But real momentum is a two-way street. Real momentum can be powerfully upwards and it can be devastatingly downwards. So don't underestimate it on either side of the coin. Just try and predict it, try and monitor it, try and understand where the herd is going and go along for the good rides and get out of the way when they turn around. And what you want to be doing here is having a look at, the fact that, people's fortunes are changing, particularly in places like Australia that has great social structure, has great opportunity, has great evenness. The rules are changing, the game is changing. The more people have, the more they demand, the more careful they are. But what you have to do is remember that things don't have to be real to be real. We're seeing again with the way social media presents things, everybody believes and adopts even if it's not true. But don't let that be your compass. You want to get the facts, you want to check it out. Because fundamentals are still critical. The property market is not doing things because people just want them to do. They're still going to be there because the fundamentals are strong. Lack of supply, strong demand. Momentum can hope that it goes down. People can want it to say, oh, it's a terrible thing, but the fundamentals will still apply in the long term, as they will to those unreal things like cryptos, like realistic price points on shares. But quality and livability is never going to go out of style. No matter what happens in the world, that will never change. The level of opulence, the level of quality is going to change, but that's still what we all strive and hope for. So look for that if you want to be safe. It's always going to be your protection no matter what. And trust your instincts. If something doesn't sit well with you, whether it's the quality of the property, the location, the price, trust your instincts about the quality. The price, make sure you're not just being hopeful, that you're being realistic. Check the alternatives. But trust your instincts because they got you here. And try and keep your sanity. Now, that will not be easy, but you've got to do it. Now, one of the ways to do that is stay off the screen for you and your kids. Now, one is going to be very interesting in Australia over the next 18 months is that the government is bringing in, I think rightfully, a ban for kids not to be able to access social media till they're 16. This could be a revolution in this country. Either a revolution of improvement or a revolution of chaos when all the kids strike and don't go to school until they get Wi-Fi. In fact, when I was a lad, you used to want to have fake ID so you could go and get a drink. Now these kids are going to want to have fake ID so they can get on social media. It's going to be hilarious to watch how society adapts. And then with your property in particular, I think we're going to have the best property market in Australia's history over the next 3 to 5 years. And you want to be in the market, not out. And I just remind with something I tell my clients all the time, you better love the property because you won't like the price. If you're looking to buy, don't feel that you can get a bargain because bargains don't exist anymore, not for the good stuff. So make sure you're brave enough to buy the right property, but more importantly, make sure it is the right property. If you can harness this information, if you can adapt to the society that's changing, then you can survive life beyond the point of no return. I hope you've enjoyed that. I hope you've had some fun. Hope you've learned something. And I look forward to seeing how you go in this new society. If you need help, we're obviously here to help you at SMATS Group. Next year, we proudly turn 30 years old, which is a great achievement. We're very, very proud of that. And thanks to all our great staff and particularly all of our great clients. We look forward to seeing you not just next year, but for the next 30 years. Thanks very much for joining me. Have a great day.